What's up, you guys? It's time for stock time. So, I just got home. I just remember that the market opened at 3. Look how the market is reacting right now. The market is reacting just like I hope that it would. Positive. Why? Because again, that trend line is the goal. Remember, think about it. We dropped this time already. We broke it. We came up. We dropped it. We came up, and we closed the week above it. If we would have dropped, it would have dropped already. This would have been the perfect area. Buyers go here, traders, whatever, they go and buy here. Next thing you know, they dump. The market stays down there, and it continues. The fact that it came up this high and went up here above this trend line was all telling me that that's a goal for this month. They wanted the United States. They're leading the way, so they gotta end the week, the month good. They want to show like, hey, we're still stable, we're still good, nothing wrong here, you guys. Just a little hiccup that we had, but we should be going up right now. That's what they're expecting. That's what the market right now is going up because they're hoping that the data that we having on Tuesday, along with Microsoft, that's gonna push us on up enough for the Fed to then give us our final word, and then we're gonna continue blasting on up, recover the dip that we just had for these last 2 weeks, or being up here where we are once with Microsoft and the data moving us up above the trend line. Once we get to the Powell, we'll most likely start retracing, and that's if we're still above the trend line on Tuesday. Or I think he's talking on Wednesday. Let me check real quick. Wasn't he talking? Or Ronnie? He's talking Wednesday, the last day of the month. He could have done it Thursday. He could have done it 30th. He could have done it 29th. He could have done it 26th. But no, let's do it on the last day of the month. Last day of the month. Look how happy the market is. Look how happy the market is. That's happy. If it was still neutral, if it was still like, are we in a recession? Are we going? You would have seen it down here. You would have seen it stuck here for hours. That the fact that it's blowing up, that it's breathing, it wants to take time. Just it's buying time so the market could end good, so the market could continue with this. Otherwise, if we break this on down throughout the night, whatever, right here, it's all bad. So that's what the market is doing. The market's, hey, we gotta buy time, you guys. We gotta buy time. We got data on Tuesday. We got Microsoft, so let's buy time. Let's keep it above the trend line. This is all bots. It's not people trading. This is not people going in and out of the trade. These are all hedge funds, all these big ass motherfuckers. My bad. Going in on trades. They're bots going in and out. We're not back in the 1300s. So okay, now that the market opened positive, now we want to wait to see how it goes at 6 and at 10 p.m. After 10 p.m., it's going to be the last 4-hour candle of the day, which is important. You want to see how this 12-hour closes. Most likely, it's going to end up closing positive, seeing how high it is. Either we got some sort of good news or Biden stepped down again or something. The market opening this excited after having a scary week is something to do with politics, of course, no shit. But something good. But yeah, that's the market just buying time. I ain't gonna go no more details. The market's buying time. We want to see how we close at 6. If we close at 6, we're most likely gonna buy time here, dip down a little bit here, create some sort of support. But who knows? Maybe come back down here where we started. Where we started was way down there. That's I'm surprised. We closed the week down here. We closed the week down here, and we're all the way up here. So something hella good happened in the market. And that's letting me know again that's going to buy time throughout the night, keep above the resistance area. And even if it drops, it's going to go up above that trend line once we get to Tuesday. I'm saying it right now. And even if we go down Sunday, Monday night, Once the market opens, the market is going to take all that good news that we had today, going up again above the trend line, and wait for that buy time. Anyways, so yeah, let's just wait till 6 o'clock, then 10 o'clock. That's all. Now the market would have fucking fell down the same way, the same energy, the same volume, the same power. Look how high it is. And we closed. We closed right here. And we shot up. So let me see. I'm gonna count it. I'm gonna count it with the ruler. Wait. It's about 11.3. Yep, it would have been right here into the resistance. Would have been scared, come on down, create some sort of support here, go down here, whatnot, but it was going to be hard getting above this and above this. Yeah. So see, it's all part of the play. There's all fucking. So we're up here. There's an important box right here. All these boxes are important, but especially this 12-hour candle. Oh, it's a box right here. So yeah, we're just gonna let it do its thing. All right, cool. Oh, this one's another one I want to pay attention to. So what's going on is right now, since the Fed, or since they believe the Fed is gonna cut interest rate, when that happens, these big stocks that stop selling, whether it be Apple, Google, Microsoft, Tesla, are gonna then start retracing on down because nobody was putting money into those small stocks, come small cap, medium cap, small cap, whatever. That's your PayPal's and your other shit. So now that the money is transferring from the big stocks down to the little ones, because now that they cut interest rates, these little companies can now start getting money, asking for money from the bank at a better price and all that bullshit. So it's gonna benefit them, and it's not gonna benefit the big guys. So the money's gonna transfer from the big guys to the small guys, and all the tension is gonna be placed on the Russell. The Russell is the opposite of a nasdaq and SPX. Nasdaq and SPX are the big guys. All the big guys are with the nasdaq, especially the top 7 that I mentioned. And Russell is the opposite. Russell tells you how the small companies are doing. So just like NASDAQ represents all these companies, the Russell does too. And it tells you if it's their turn or if not their turn. And recently, somebody mentioned right here a 3 year. It's not a 3 years, more than 3 years, I believe. I'm going to take out the indicators. So if you see, this is putting everything together, and this is 2021. And as you can see, any minute now, we could be blowing up. We've been on this trend. Let's see. And we recently broke out of it. In reality, something like this could be something like this, but that already happened. So your next step will be right here. Be this one, and we finally started breaking them up. The main area was right here, and that's what we broke. And then the next area will be down here. So see, this will be your middle area. Good, bad. So when it goes up, you already know what's going to happen because it's back in your middle ground. And as anyways. So and then your next area right here is this, where it's currently at right now. So any moment, as we talk to the Fed and the Fed says the bad news for the big guys, the small guys are gonna blow up. That's why they're so close to the monthly. That's why they're so stuck right there, because they're waiting for that the Fed to say those special words. See? And once the Fed talks, boom, this bitch gonna blow up, and you're gonna see small caps, all these small companies start go rallying on up. And if you don't believe me, listen to this guy right here.
You know, Tom Lee made a lot of crazy predictions over the past 18 months, and he was right about every single one of them. But this one, his latest one, might be the craziest of them all, and it might be worth a lot of money if he's right. Let's talk about it today. First of all, I'm going to show you the clip because I don't want to hold you hostage. If all you need is to hear Tom Lee speak, here it is, and then we're going to break it down in a second. Check it out.
But to me, this is why the S&P had a great first 6 months. Maybe it needs to consolidate those gains. But now Russell 2000 has an 11 median PE, earnings growth 800 basis points faster. And, you know, it just posted 11 days where 10 out of 11 days had a 1% move. The 9 times it did that since 1979, when you weren't in a bear market, we were up 100%, 1 month, 3 months, 6 months, 12 months later. 12-month average gain 40%. There's a lot of opportunity in small caps. Part of it is that there's a lot of overlap. When the Fed cuts, that's lowering cost of money. That's good for small caps and the regional banks.
You don't think the large caps are done. You just think it's a slowdown for the S&P 500 on a broader level?
Yes, that's right. I think the Mag 7 was very attractive at the start of this year because growth was scarce and they've had great visibility. And they're not expensive. You know, 27 times earnings isn't demanding. But now that there's a visible catalyst for small caps, I think investors are taking some profits up. You know, NASDAQ was up 20% and putting it into small caps. I think for the month of August, small caps can do something more than 15% even because they've underperformed so dramatically. And the type of move we've seen just in the last 2 weeks is something that only happens at the start of a pretty significant advance for small caps.
Tom Lee is talking about one thing and one thing only, which is that the summer is going to be owned by these smaller companies, the small caps. He's saying that by the end of August, the small caps index, the Russell 2000, the IWM, is going to run up by 15%. For an index to run up 15% in a month, that is wild. But what he's saying, this will be just a setup for another 40% until the end of the year. So absolute insanity.
So there it is. That's why now you want to pay attention to the Russell and what stocks are in the Russell so you can make some good money, because at some point they're going to be transferred. You're most likely going to start seeing the NASDAQ, if it is bad news, and it's already showing signs, especially the NASDAQ. The NASDAQ didn't recover as much as watch. So if you notice the NASDAQ, the main area that we wanted to be above was this area right here. And it's just been stuck in this area right here. Same area that I started from underneath, just been there, okay? And if you look at SPX, you see it's been more, instead of getting stuck here in this region below, run up, it moved higher, it expressed more, there was more movement, more possibility, whereas the NASDAQ, it's right there. There's no, you know what I mean? And let me see the difference of how it opened. Also, that's important right here. Very important that we hold this area right here. It's like a cushion to us, especially how we shot up above that shit. So for the week, this red, right? Alright, so for the red, right here, which is kind of same shit, but still, I don't like how NASDAQ is not didn't recover, showing strength, like it's gonna continue going up, like XPX. The fact that it's still maintaining that trend line, and then the fact that it's cool is good, but the fact that NASDAQ just ended up closing halfway between, in the middle of nowhere, with no trend line underneath or nothing. The closest trend line is this one right here. Too many lines to know, people. Too many lines. There. But you see how far off it is? I understand it came across here or somewhere near here. So that's scaring me, because what that's telling me is that we could end up being here by Tuesday night or Wednesday. But anyways, that's too much out there. Alright, you guys. So same shit. Check it out how we close at 6, and then from there check how we close at 10 o'clock. And same with this. If we close here at 6, most likely gonna end up being here the whole day. And that's a 4 candle, so a fucking daily, my bad. So you close right here, and then we close right here, so there's the daily trap zone right here. Anyways, yeah. Alright. This is Brian Seacrest. I'm out.